Katie Braden here at the Morningstar Investment Conference, and I'm here with Brady Beals at Luma Financial Technologies. First of all, I just want to say thank you for being a lead sponsor of this conference. And not only are you a lead sponsor, you guys actually do a lot working with Morningstar in a pretty unique way. So let's start there.
Yeah, that's right. So Luma actually partnered with Morningstar to deliver data for structured products, so structured notes and market-linked CDs, where we're actually giving enough analytics from an asset allocation perspective to actually put structured notes into a portfolio. So advisors that use Morningstar will be able to go into their AWS system, generate X-ray reports, and actually see how structured notes impact the overall portfolio.
Nice. So you guys are pushing data to Morningstar versus most advisors and companies are kind of pulling data from Morningstar.
Yeah, no, it's really exciting. And I think it'll really allow advisors to actually implement what's been traditionally a pretty niche product into the overall portfolio asset allocation models that they're already using today, but taking advantage of the unique risk return metrics that structured notes can generate.
So with that, I mean, there's a lot going on in the markets now. There's always a lot going on in the markets, but where would you say for advisors that aren't yet using structured notes and structured products, how should they be looking at those and how can Luma help them evaluate that within their portfolios?
Yeah, no, I typically look at structured notes as a way that advisors can access alternative investment like profiles by using equity and fixed income instruments. So really, when you look at a structured note, all it is a traditional debt instrument issued by a bank that instead of paying a fixed rate, the banks are actually using options to tie it to the market. So as the market's been up and down, as rates have been volatile, it's a really effective tool to mitigate risk. So you can add principal protection to your equity allocations. You can also enhance yield by introducing equity risk as opposed to credit risk. So as the market kind of goes through a little bit of turmoil, as kind of like your junk rated debt becomes a little bit more risky, this is a really effective way to keep your yield enhanced without introducing additional credit risk.
Yeah, Brady, we've got a lot going on the screen behind us. You guys are a fintech company, so share with us a little bit about what the actual platform looks like and the user experience there to help advisors with this.
Yeah, I mean, so the platform was really designed to allow advisors to come in and actually customize unique risk return profiles. So as opposed to the traditional method of emailing or making phone calls to your wholesaler, advisors can actually go onto Luma, go straight into an auction, create the kind of request they're looking to do, get pricing back from issuers automatically, and then decide if they actually want to launch a note or look at something else. So it's really intuitive. It's really designed to give advisors as much information about kind of the overall risk return profile of the note they're looking to do, and then actually issue the note with the bank. And then after the note is issued, we track everything from coupons, calls, maturities, as well as just overall market performance of the note, as well as what the note is tied to.
And who all do you guys work with? I mean, you work across RIAs and broker-dealers, and what's your sort of target advisor clientele?
Yeah, I'd say we're most effective actually in the fiduciary space. So we got our start working with some of the wires. So Merrill Lynch, Morgan Stanley utilized the platform already, and that was really tailored for their trade desks actually to optimize the way that they were creating notes for their advisors. What we've been able to do is actually democratize, if you will, some of those features and move it into the advisory space so that advisors can actually go in and again, look at their portfolio, look at how notes can alter their portfolio effectively before they decide to launch a note, and then manage it after the trade, which is something that traditionally was always hard to do for structured notes. We've made that very intuitive for advisors.
Yeah, and talking about, with all the alternatives and kind of the place in the portfolio, what would you say is sort of the ideal client that a structured note would be appropriate for?
Yeah, I think there's two types. So number one, you can structure a note such that you are keeping or you're introducing equity exposure. That's very effective for folks who are nearing retirement, nearing that stage where they've kind of had their accumulation stage and now they're into preservation stage. But with where rates are and how volatile that's been, it's a really effective tool to keep principal protection in place, but allow investors to stay exposed to the equity markets. That's number one. Number two, enhancement of yield. So even though rates have come up quite a bit, which is good or bad depending on how you look at it, structured notes are still a really effective way to, like I said earlier, introduce equity risk to enhance yield as opposed to credit risk. So there's two routes you can take. One, keep your equity exposure, but do it in a principally protected way. Or two, enhance yield without necessarily going down the junk bond path.
Yeah. Fabulous. And I have to ask, where did the name Luma come from?
So we are illuminating the markets, and illuminating equity-linked structured notes is something that we're focused on. We also did introduce annuities as something else that we do. So we're really trying to illuminate anything that is kind of a unique risk-return profile. We're trying to make that intuitive. We're trying to make it transparent. That's really why we're here.
Awesome. And where can people go for more information and to get a demo and chat with you further?
So lumafintech.com.
Okay.
That'd be the best route.
And thank you again for being a lead sponsor here at Morningstar.
Thank you.